Okay, guys, let's get into our video. Yeah, so this is the answer sheet that you get provided when you are writing your exams. But don't worry about it now. But yeah, let's go to question one. So we're going to be starting with the basic um, questions. So the question that we'll be doing today in our first session and the second session is question one: fixed assets and the statement of comprehensive income. But I'm going to do it proportionately. I'm not going to do it in full. For now, I'm just going to be starting doing this one and this one because I want the video to be short. So in our first video, we'll be doing 1.1 and 1.2. Okay, so let's start. So what I want you to do, guys, when you're doing your questions, I want you to plan. I don't want you to just go and write. I want you to plan and know what is being asked. So let's do it like this. So they're saying question one: the information relates to Robbie Limited for the financial period 2021. So step one in an accounting question. Step one is a must know. Know your year end. When is this period ending? It's 28 February 2021, right? Okay, keep it like that. Meaning that you need to draw a timeline. Ask yourself a question. When is the first day of this financial period? That means it's 1st March 2020, right? And then that means that the year ends when? In 28th February 2021. It's very important for you to know these timelines because it's what is going to help you to understand the question as to when are the events happening. Yeah, keep it like that. So this is beginning, then this is end. So you're gonna track your the events in everything that you're doing. You must know the beginning and the end. Okay, let's not be slow. So now the question is saying calculate. You're gonna be having calculations. You need to have calculations. Calculate the following: the missing amount denoted by I1, 2, 3 of the fixed asset note. Very important to note, refer to the information BA, fixed assets. That means that in question one, there's a lot of information, but they guided you that this is the information that you need to be focusing on. BA only up until this one. Don't go beyond this one. That's the information that is relevant for part A, that is this one. So you see, they guided you already. So you're not gonna be able to say, I don't know where is the information. I don't know where is the information to use to answer this part. And that's the information that they give you. They give you guidance. So what are they actually asking you? Oh, they're asking you to fill up this note. I did see it, to fill up this note. Then take 2 minutes, roughly read the information. You can cut it to pieces and decompose it so that it can make sense to you. Then number 2, saying calculate profit on sale for equipment on the 1st of October 2020. Okay, let's go down. Let's keep everything and go straight to BA where we're being guided to. Vehicle. So there's a vehicle here. Quickly, there's a vehicle information. So they're saying this is step one. Step one is fine. Now we're going to step two. Step two is for reading of information. Step two, reading of information. Right? Okay. Then, so meaning that you need to read the information quickly, roughly. So they say that the business owns 2 vehicles. So meaning that there is 1 vehicle and 2 vehicles. So the first vehicle is this one, and your second vehicle is this one. Vehicle. That's what you do. Planning. The thing that they're dealing with. The business owns 2 vehicles on the 21st, on the 28th of February 2021. Man, that means that on this date, there were actually 2 vehicles. 2 vehicles. Guys, very important what I'm doing here. You're going to be tracking information. That means that there are 2 vehicles there. The second vehicle was purchased on the 1st of November 2020. Oh, so mean that one of these vehicles is new. So there's a new vehicle. Guys, that information is very important. So let's go mark that date there. So they're saying that when the 1st of November 2020, there's a new vehicle. Alright, so mean that okay, they have purchased a new vehicle. Very important information to keep. Okay, be quickly. Vehicle depreciated at a cost. Guys, when you're dealing with assets, you must know if that asset is depreciating on cost or diminishing. That's the thing that you need to be learning. Size to you. The moment you understand the policy that they use to depreciate their vehicle, then you are in. So let's say NB tribute cheating on cost. Guys, you do this on the day. Be quickly, but try to be quick when you're doing it because you need to practice doing it. Okay, already you know this one. Already the question that they gave to you is saying what? Filling the missing spaces here. So vehicle you done. You can do vehicle and go to equipment, but rather read equipment is follow. Depreciation is 20% per annum on diminishing. Be quickly. See, okay, and B. They gave us that information. So the difference now mean that in this question, you're not going to pass and get 100% of the depreciation on diminishing. That means that when you were studying diminishing, when you were studying at home, you must have how to use cost, how to use diminishing. And then on this day, you are not frustrated. You are comfortable that I know how to use diminishing method, how to use cost method. Guys, very important for you to know these things. Very important for you to know these things. Very important for you to know. NB equipment was sold. Oh my God, they sold a vehicle. They sold an equipment. Oh my God. Equipment sold. Sold. What's the trigger? Oh, asset disposal. Asset disposal. Disposal. They sold an asset. So once they sell an asset, number two, you need to say, I'm going to have to know my cost. What is the cost of an asset? Number two, I'm going to have to know what my total accumulated depreciation. That's your planning. That's the thing that you need to be learning at home. So meaning that is that what the balance of it at the beginning of this period. That is like 1st of March 2020. It's not only that one. Until the date of sale. Guys, listen to the English. I want you to consult me if you understand what I'm saying. When was it sold? It was sold on 1st of March, on 1st of October, 2020. Guys, read carefully. So meaning that here there are two depreciations that you need to be calculating. That means you're going to be calculating the entire depreciation of this asset until the date of sale, right? Okay, just to be quick. Well, let's see the info that we have. They say accumulated depreciation on equipment sold was 336,700 on the 1st of March. Oh my God, my life is easy. Then come quickly over there. Say I have the first part of my number two. That means that you have the first part of number two. Remember, guys, let me remind you something. Why we have to do the first part. So the assets start to depreciate once it is brought into use from the date it was sold, it was purchased. So you buy an asset maybe in 2015. You might calculate depreciation from 2015 every year up until it gets depreciated to 1 rand. So now what you need to remember is that in this one, this asset is gonna be sold. They didn't tell us when this asset was purchased, but what they made it easy for us is that they gave us a depreciation up to this period. So we see, but now we're going to need a depreciation again up to which period? So it was sold on October 1st October 2020. So we're gonna have to have a depreciation sold equipment. Eh? Oh. So meaning that, okay, we need depreciation here from this date and here so that we can add it here, so that we can have an entire depreciation of this asset up until the date of sale. That thing you need to practice and say it in your mind. 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 We don't know if you're gonna calculate it. Say it in your mind. That it says like this. When you dispose an asset, you need to know the entire total accumulated depreciation of the asset. So mean that from the date of purchase up until the date of sale. To make it easy for yourself, you need always ask yourself the question: what was the accumulated depreciation of this asset from the date of purchase up until the beginning of this period? From the beginning of this period up until the date of sale. Guys, this is two-step calculation. Please, from let me here so that you can have a notes. Date of purchase until date of sale. Why this question is not important, the date of purchase? Because they gave us the balance that has accumulated until this period. What we just need to do now is to take the cost and minus this annual depreciation and get a current depreciation, and then we add it here to get a total annual depreciation. Why are we minusing this annual depreciation? Because they are using the depreciation on diminishing method, not cost. Okay, now we have done our planning. Then let's quickly do our calculations. So meaning that number one, they're asking number one, they're asking us, oh, carrying value, what? That's easy. Carrying value, that's given. Carrying